Hello everyone, and thank you for tuning in to our latest vlog episode. Today's episode is both timely and important as we talk through the new tax legislation that was passed in early July 2025. On today's episode, I have not only a KML alum, a KML Foundation board member, but a CPA in Josh Bolt. All right, Josh, thank you so much for being here and joining us to talk through the tax legislation that was passed in early July. Looking forward to hearing your insights.
Thank you for having me.
Awesome. If you had to summarize the new tax legislation that was recently passed, how would you do so?
Yeah, so the One Big Beautiful Bill, or OB3, which was just passed this past July, a lot of what it does is extend things that had been passed in 2018 under the Tax Cuts and Jobs Act. Things like the individual income tax brackets are extended at the same rates where they were, so most people will see that their tax percentage will stay the same. There are over 100 new tax changes or provisions in this new bill that we'll talk a little bit about, but one big thing that I think that will affect most people is that the standard deduction remains at a higher rate. I believe it's up to $31,500 for tax year 2025, so most people will still take the standard deduction rather than itemizing deductions. One new thing I can say with charitable deductions is people that previously had only itemized, which is a lower percentage of people, were the ones that could take charitable deductions as an itemized deduction. Now, under the new bill in 2026, you will be able to take an above-the-line deduction for charitable donations up to $2,000 for married filing joint status. So how that might work if you have adjusted gross income or AGI of $100,000 and you would not normally itemize your deductions, you would be able to take up to $2,000 above the line deduction, which would knock down your overall taxable income. Whereas those who itemize now will be looking at a 0.5% AGI floor. So if you had AGI of $100,000, the first $500 of donations would not qualify, but then you'd be able to itemize the rest, and anything that you don't take as the itemized deduction would carry forward to the future year.
Okay, very cool, and that really impacts my role and everything that we do here as a nonprofit at KML and with the KML Foundation. So basically the idea would be most people, I think it's over 90%, use the standard deduction, but then they get that $1,000 if single, $2,000 if married, that they can use towards charitable contributions. Is that correct?
Yep, that's correct.
Very cool. Awesome. And then are there any other major changes in terms of estate tax planning and how that might impact KML constituents from like an estate tax planning standpoint?
Yeah, they have continued the larger estate tax exemption, and that's going to be indexed for inflation going forward. It's up to $15 million for individuals and $30 million for joints, and that's just on estate tax. So most people obviously don't have that much of an estate, but if you're under that amount, you won't have any direct estate tax that would get taken by the government.
Okay. Yeah, and obviously this is a big bill that was passed. There's a lot that goes through it, so make sure to talk with your CPA, tax professional, with everything that you do. But there are also some other items that are important in terms of deduction on tip income and then overtime and how that's taxed. Would you mind running us through that?
Yeah, those were kind of two of the big headlines going into this legislation. I know no tax on tips was a big tagline when it was getting pushed through Congress. It ended up being some tax on tips. So how that's going to work is for those that are in the service industry, your direct cash and credit card tips will qualify for an above-the-line deduction up to $12,500 single, $25,000 joint. But there's a lot of qualifications on those items. If you have like a direct built-in service fee, like the 18% that restaurants will charge you, those will not count as tips. So there's a lot of qualifications and a lot of guidance still coming from the IRS. We're still here, in the early weeks after things were passed. So there's still more guidance to come on how that will all work, what the W-2s will look like as far as reporting and things like that. Going into the overtime laws, it's only qualified overtime, which is taken from the Fair Labor Standards Act. There's certain things that don't qualify as qualified overtime, so you have to take a look at what that is. It's mainly the time and a half pay that you get on a 40-hour work week, and then only that premium pay, only the overtime pay, not your normal rates, would qualify for the deduction. Again, that's going to be an above-the-line deduction, $12,500 single, $25,000 joint that you would have on that qualified overtime pay.
Okay. Yeah, thank you for running through both the tax on tips and overtime. One of the things I thought was interesting with the latest legislation is the idea of the Trump accounts and basically putting money aside for your children for it to grow over time and potentially help them later in life. Obviously, we work with families all the time on leaving their legacy and everything in terms of that and potentially giving to KML or the KML Foundation. Could you run through the Trump accounts and how that might benefit KML families going forward?
Yeah, sure. So how we think these are going to work at this point in time, and again, more guidance to come on how they will function. You have up to $5,000 that can be contributed for a minor child under 18. And that can come from anywhere. It can come from parents, relatives, businesses. If it comes from a nonprofit, there's less rules on how much you can put into those accounts, but $5,000 a year can go into a Trump account. We think it's going to function mostly like a traditional IRA account where it's tax deferred growth within the fund, and then you pay tax as ordinary income tax when the funds come out, and those can't be distributed until the child hits 18 years old. But you get tax deferred growth within that fund, and it's a good way to start building for your child. There's still RV vehicles like 529 plans and Roth IRA accounts that you can use, but this is just another good option that the government's going to provide. And also a bonus if you have a child born between 2025 and 2028. They have a pilot program from the government that will put $1,000 into that account for the child.
Very cool. Wow, that's quite the benefit and just another great way to look to build generational wealth for you and your family and really to leave a legacy for those that live past you, or after you, I should say. And yeah, going forward, is there anything else that you'd want to add in terms of the new legislation or things that people should watch out for going forward?
Just keep an eye on how things change. There's more guidance coming. The child tax credits being increased to $2,200. There's little things like that, things that are indexed for inflation that keep going up each year. A lot of things from 2018 that have continued, qualified business income deductions and things like that if you have a business. So lots of stuff that has kept on going the same way it had been established from 2018. We covered kind of the new big points, so that's a good summary.
Love it. Awesome. Well, thank you so much, Josh, for joining us and running through this tax legislation. I know there's a lot to it, and thanks for covering that handful of points there. So really appreciate your time. You do a lot with your church and with the KML Foundation, so really appreciate how giving you are of your time and your expertise here. So much appreciated.
Yeah, thanks for having me.
Thanks, Josh. Thank you again for tuning in as we walk through the new tax legislation. Big thanks to Josh Bolt for walking through all the main topics, everything from standard deductions to estate tax to the Trump accounts, and then taxes on tips and overtime income. Again, if you're looking to reach out to Josh, feel free to do so. He works with individuals as well as small businesses. He'd be happy to help you out. He's a Kettle alum. We'd love to give him business as well. Again, thank you so much for joining, and we'll look forward to seeing you on the next episode.